If you're thinking about investing in real estate and don't know anything about loans in general, today in SERDNA Talks, we're going back to basics. We're going to talk about which is the best loan you should get and why. One of the things that you should always keep in mind is called leverage, because using someone else's money to do what you want, like buying real estate, is awesome. Let's talk about adjustable rate mortgages or ARMs. They are basically a home loan with an interest rate that can change over and over and over. And this means that the monthly payments can go up and down all the time, which can be very risky. So if you're here in the USA, I highly suggest that you stay away from adjustable rate mortgages, since those will surprise you eventually and they will give you a huge headache. You should always look for certainty, especially if we're talking about money and investing in your future, because having a fixed rate loan for the longest period of time will give you a peace of mind, since numbers are a deciding factor when it comes to investments. Let me give you an example. Let's say that your monthly expenses, including principal, taxes, insurance, homeowners association if there is one, property management if you have one, plus the reserves in case something happens to the property. Let's say that equals to $2,500 a month, and the property is currently being rented at $3,500. That means that your monthly cash flow is $1,000, right? Or $12,000 a year. But what if instead of having a fixed rate mortgage, what you have is an adjustable rate mortgage? Then your cash flow can and will drastically suffer as soon as interest rates changes. If they go up, if they go down, it will put you at risk of making less money. Just imagine, with all this crazy planet, all the things that are happening around the world, what if we go back to the 80s where interest rates were extremely high? Back then, interest rates were at 15, 17, 18%, and the less cash flow you get, the more risk you're taking. That's why it's so important to buy with a fixed interest rate. And if you can do a 30-year mortgage, even better. Remember, leverage is key, especially if the interest rates are very low, just like the ones we are currently seeing in today's market. If you have questions, remember to subscribe to SERDNA Talks and to share all my videos with your friends and family. I have to go. See you soon. Ciao.